I'm sure. I mean, the proof of the pudding is in eating, and opportunities. They always find investors always find opportunities in good quality companies such as yours and position themselves. Thanks, Girish. Great chatting with
Thank you
you,
so much.
and
Yeah.
thanks for sharing those insights. That was Ken Fin Home. Such strong commentary. In fact, let's take the discussion on the markets also forward with Trideep Bhattacharya joining us now from Edelweiss AMC. Pradeep, congratulations on your new role at Edelweiss AMC. Great to be chatting with you. We have you on a bad line, so telephonic interaction is fine. Talk to us about how you are looking at the recovery. You must have heard the great commentary coming from Canfin Homes of demand, robust demand, improving asset quality, and good growth. What does it tell you as an asset manager regarding the kind of economic recovery which is panning out?
Yeah. Thanks, Ajay. Good afternoon. Thanks for your comments and thanks for having me on the show. Always pleasure to be on your show with a knowledgeable anchor like that of you. Yes, I think one of the or two or three things that we see in the economy happening and then the runoff on the market. More generally, we would expect an earnings recovery to continue in the second half of fiscal 22. But more importantly, this time around, it seems like that the enabling conditions are very much intact for an economic cycle in India. And this is kind of evident in the commentary that you heard from Canfin Home and various other economy-linked sectors and the companies from the same. And for the first time in a while, we are seeing these companies talking more positive than what we are used to over the last 3-5 years. And in that context, India hasn't seen an economic cycle, a good one, since Demon times. And if that were to happen, I would reckon that earnings overall could see a meaningful recovery even from here on, as we kind of move out of the COVID situation and heading into calendar year 22 and whatnot. So I think fundamentally these are quite bullish times. First time in a while that we are talking about economic cycles. So things are looking positive from an economic standpoint.
Mm-hmm. Right. Pradeep, you've seen a lot of cycles, economic cycles, market cycles. Where is the intersection of, where on that intersection of market cycle and economic cycle and earnings cycle, where are we right now in your view? What phase are we in right now?
I think it's a great question. So we are in a situation, or we are in the, I would say, an early stage of a proper economic recovery, which we haven't seen in a while. And usually, just to describe the conditions that we face in such conditions of market, little high, and it always and a lot of people miss out simply because optically the markets look expensive. But what tends to happen is over the next couple of years, earnings do a quick catch up, and then retrospect markets appear cheap, and hence 2 years later, all market pundits will come and say the market looked extremely cheap then, and we should have bought then. But the fact of the matter is, the situation now, looking at 2 years forward, the earnings estimates are clearly very undercooked. The other thing which we should not underestimate, so this is a cycle overall. So I would say we are in the initial stages of the earnings cycle. I would probably say the market to a certain extent factors that in, but not clearly to the extent that might actually come through. Just to give you a sense, globally, particularly in the United States, 47% of the overall liquidity has gone in the form of stimulus. Now, that is basically in some form or the other going to start reflecting itself in some sort of flow, whether it's earnings, capex, this, that, the other. So we have a lot of fundamental, apart from just liquidity, a lot of stimulus flowing in the global markets as well, which will find its way through the earnings of the company. So not to underestimate that. But the second important phenomenon which I would like to highlight on your show is that, the supply side reform, so particularly what the government has done over the last 3-4 years, whether it's demonetization, whether it's GST, and plus the PLI schemes, and now that we have the beneficiary from China Plus, these have the potential to increase the structural growth of the economy by a few percentage points over time as well. So all in all, put together, I think if the interest rates don't really play a spoil sport, we could have a good earnings recovery over the next 3-4 years, and equity holders should actually stand to benefit from that.
A quick word on valuations, Pradeep, because you must have observed Jefferies, CLSA, a bunch of reputed brokerages have started calling the market slightly expensive because of the sharp run-up versus the earnings growth it offers in the medium term. What are your thoughts on valuations?
Absolutely. I mean, so that's what I said, that overall, if you look at valuations today, valuations appear expensive, particularly on static multiples like PE, EV to EBITDA, and stuff like that. And in some pockets, they are. But then there are areas where we would see, particularly on the economy-linked sectors and economy-linked companies and leaders within those sectors, where there is a sharp expectation of earnings upgrade, which will happen, which in my opinion will come through and not yet factored in the earnings so far. So if what looks like 15% growth rate in a company basis starts to look like 25 to 30%, then the valuation scenario changes a good while without making too much of a difference. So, so that's what I'm talking about, that ultimately the valuations today appear expensive on slightly depressed earnings, which I think will normalize over the next 2 years as the economic cycle shows its true shape. So we shouldn't underestimate that part, is the point that I make, also admitting that in certain portions, valuations may look expensive. That's the job of an alpha manager, to sort of find those pockets where there is alpha creation due to happen. But I think one thing that I'm quite confident of this earnings recovery, that it could be more longer lasting than what people anticipate at this point in time.
Excellent point, Pradeep. Would have loved to take this discussion longer, but have to wrap it up right now. We'll have you again back on the show. Thanks so much for your time. That is a wrap on the show. Thank you very much for watching, guys.